Hey there, and welcome back to the Mortgage Update with Dan Frio. Today I want to go over how to calculate a mortgage payment, or kind of flip that around, how much would you qualify for if you wanted to, basically stick with a specific payment. And I'll explain a little bit more here in a second. So I hope you like the video that I do. And a lot of the videos that I probably have over 200 videos out there. So if you like this one, please give me a thumbs up. Don't forget to subscribe. That helps me and helps a lot of other people, find my YouTube videos. And if you would, comment down below. Let me know if you have any questions, or if there's other videos that I can kind of dig into to help you with some of the common questions that you might have. So the first thing you want to do is, and I finally found this calculator and added it to my website not too long ago. And I like it, and I'll show you why. There's a lot of specifics on why I like this particular calculator. So the best way to find me is go to the mortgageupdate.net, and this will bring you to my home page, which is right here. And what you're going to do, and I'll show you, it's the home page. So you're going to go and scroll down over to this section here, and this calculator is basically on almost every page on my website. And there's different calculations for two different loans, just a generic loan or a mortgage. So what we're going to do is we're going to go to the mortgage. So to get to this piece, or this phase of trying to calculate your payment, you need to know a few things. You need to know what kind of loan you're getting, kind of an approximation of the interest rate, the approximation of your real estate taxes, and an idea of what your homeowner's insurance is going to be. A lot of this can be easy. You probably searched a property that you liked and you found it online, like a Zillow or Realtor.com or things like that. It's going to give you a lot of this information. So what we're going to do is we're going to take that information and move it over here. So what we're looking at, I'm just going to use some of the numbers in here. So I'm going to say we want to buy a $300,000 home with 10% down, and I'll kind of walk you through piece by piece. So we want 300,000 here, and I'll just plug it along as we go. You're going to go with 10% down. You want a 30-year fixed rate. Right now we're going to default it to 5% interest rate. That's about where most loans are at this point. Real estate taxes, we're going to say, it's a $300,000 home. I'm a mortgage broker in Illinois. Our taxes are pretty high, so I'm going to say my taxes are $6,000 a year. Your homeowner's insurance is probably going to be in the range of $1,000. So let's put in $1,000. We're only going with 10% down, so you're going to need what's called PMI. Let's just use a factor that's built in for right now, and that is the 0.52. That's going to give you pretty close to the range you most likely would be if your credit scores are in the 700 range plus. So that's where you're going to be. That's basically what you need at this point. So what you're going to do, you can mess around with the dates if you want, but I wouldn't mess around with that right now. Just go to calculate. What it's going to do is it's going to give you and break down what your payment would be. Right here, your monthly payment, including everything, would be $2,149.75. And it breaks it down for you right here. That's your principal, your interest, and then with your PMI and everything else. So that is that section right there. And then the dates, again, your dates aren't going to really coincide unless you plugged it in, what you're actually going to get. This number will probably make you throw up. That's how much money you're going to have to, you would pay back to the bank if you actually made the minimum monthly payment monthly for 30 years. In most cases, believe it or not, studies have shown that mortgages are they only usually last about 7 years before somebody refinances and or sells. So don't be kind of freaked out over that number there. So let me go and show you now how can we back in a number, and here's what I mean by this. Or here, let me explain what I'm asking. I just recently had a client that said, I'm looking for a house and I want my payments to run approximately $1,300 a month. How much could I afford? So basically what I'm going to do in this section here is I'm going to figure that out. So we're going to say, we're going to keep all of the, well, let's tweak this a little bit. We're going to say, let's start out, on this payment, the payment is $2,100. That's too much. We want a payment of $1,300. So we need to drop down that value. So let's go with 200,000. Well, because of that, your real estate taxes aren't probably going to be 6,000. So let's make a more realistic number at this point of about $3,000. We're going to keep all the other factors the same for the time being. We're going to calculate it. Let's see what this comes out. Oh, actually, I haven't figured that out in the past, but at 200,000 with these terms, your payment would be $1,377. Let's say, you know what, you don't want to go over 1,300. Well, let's go to 180. Let's see where this puts us. Because basically, it's going to be a trial and error. So you're getting there. So now let's go to, we're going to go 190. And it's, again, you're just going to do trial and error to see where you're at. 1,325. Too much. 185. Let's see where this puts us at. So this is what kind of a roundabout way, what I do when somebody calls me and, we go through and they want to know specific numbers. You're going to see that's as close as we're going to get, $1,299. You wanted $1,300. So here's what I always tell people, it's very hard for me to figure out, how to get you to a $1,300 payment on the button. Reason being is I can really tell you once I know your credit scores and how much you want to put down as a down payment, basically what numbers, would fit to a T, to the penny. However, the biggest factors I don't know are your real estate taxes. So again, in Illinois, the property taxes on this place could be $3,000, $4,000, $5,000, $6,000. So if we calculate this payment, I come back to you and say you can afford a $185,000 home with these terms. And again, your payment's $1,300, just like you wanted. Well, then you find a house, and now you say, Dan, the taxes on this place are $4,500. Well, obviously, now that number isn't going to be $1,300. It's going to change dramatically. We went up $125. Well, nothing's changed other than the taxes. The taxes play a huge part of your payment. Not a lot of people get that. So again, when I try to figure out what your payment's going to be, the real estate taxes are a big factor. So I always, I try to ask my clients, where are you looking to buy? Have you kind of kicked the tires on a lot of properties that you're looking at? Kind of give me give me a ballpark of what the taxes are going to be. Also, the property tax or the property insurance. What you might want to do is whoever you have your auto insurance with, try to call them, bundle the package, and ask them, if I were to buy a $200,000 home, give me an idea what my homeowner's insurance would be. This is another area where your credit scores come into play. So if you follow some of my videos or a lot of my videos, credit scores are a huge part of everything you do in your life, basically. So they might pull your credit, they might not, but you want to get an idea what your homeowner's insurance is going to be. The reason being for that is if you've had a house in the past, you've had some claims, that insurance might be a heck of a lot more than this. However, if you're buying a condo or a townhouse or something smaller, a $150,000 home, your homeowner's insurance might only be $800-900. But that isn't you can see on that, the property insurance, we use is $1,000. It might be $1,200. It might be $900. That's a difference of $300 a year. The property taxes that's the big chunk of things. If the difference between $3,000 and $5,000, $3,000 and $5,000 in tax, that's $2,000 a month or a year. You equate that out to it, that's a big chunk each month that your payment would change. So I hope I explained this to you in better details. So you can go to my website, themortgageupdate.net, go to the first page, click mortgages, and you can kind of finagle with the numbers right here to see what you can afford or what the payments on that dream house you found online, what it's truly going to be. Please don't use the numbers that show up on Zillow or Realtor.com, things like that. A lot of times those numbers are skewed. The interest rates are very favorable. I'll put it that way. I'm not saying that they're wrong, but they're very favorable. In most cases, it's 20% down plus. So they try to drive down that payment for advertising purposes. But this will give you the real numbers on what you're looking for. So again, I hope you like the video. If you do, please give me a thumbs up. Don't forget to subscribe. If you want to reach me personally, you can reach me at 630-338-1160. Or you can find me on the web at themortgageupdate.net. Or check me out on YouTube. Just go to YouTube and find Dan Frio, DANFRIO, or email me too at dan.frio@gmail.com. Thank you so much. God bless. Have a great day.